Hello, everyone, and welcome to CoinDesk's Policy and Regulation Show. I'm Jen Sanesi, here with my co-host Renato Mariotti. We join you every other week to discuss all things policy and regulation. Renato, how's it going?
I'm doing well. It's been an exciting time. I'm glad to have the government reopened again and market structure moving forward.
The government is open. We have an XRP ETF, the very first spot XRP ETF in the United States that's launched on the NASDAQ this morning. I'm told funds are flowing in very quickly, so the XRP army should be very happy. Renato, I always ask you, what you're watching on this show first thing, but I'm going to start with something that was interesting to me because you and I have talked a lot about prediction markets, and how we might see prediction markets hit the scene from a regulatory perspective. I just saw on X that this morning Polymarket rang the opening bell at the New York Stock Exchange with Dana White from the UFC because they are entering into a little partnership. I want to get your thoughts on that.
Yeah, look, prediction markets are just absolutely taking off. There's so many people entering the space. CME and FanDuel have announced a partnership. You obviously have Kalshi pairing with the NHL. You have Truth Social launching prediction markets. It really looks like a lot of the smart money is going all in on prediction markets right now, and they're here to stay. And it's going to be really transformative, particularly in the sports space where there's been some regulatory battles over preemption. But Kalshi had a big win on Monday against the Indian tribes in litigation in California, in which the judge found that the Commodity Exchange Act preempted, was essentially carved out the prediction markets from the IGRA, the Indian Gaming Act that the tribes are relying on. So I think right now, it really looks like a clear path for prediction markets. There's still some uncertainty, still some battles in the courts, but it sure looks like a smart bet to bet on prediction markets right now.
What a line, a smart bet to bet on prediction markets. You and I have talked a lot about the different state regulators, like you just kind of mentioned, against what's happening on the Fed level. And I saw a few days ago now, New York lawmakers introduced a bill that would prohibit most sports related and event based prediction markets. It sounds like what you're saying is, these acts are maybe being outweighed by what's happening on a larger level and maybe are not an indicator of what's to come.
Yeah, I think that's right. I mean, there are still battles out there. Just to be clear, there's been conflicting rulings in Nevada. I expect that ultimately to go to the Ninth Circuit Court of Appeals. It looks like there was an oral argument in the Third Circuit Court of Appeals because Kalshi had won in New Jersey. It looks like the judges in that oral argument were going to side with Kalshi, but there's a contrary ruling in Maryland. So will there be conflicting court decisions? Yes. But that's going to take some time, Jen. And in the meantime, there's all of this investment and excitement and interest in prediction markets. And so many people are entering the space. It just seems hard for me to believe that they're going to just completely disappear at some point in the future, even if there is an adverse court ruling.
All right, let's bring our first guest in, a friend of the show, CoinDesk Global Policy and Regulation Managing Editor, Nick Day, to kick us off on this first day back after a very lengthy government shutdown in the United States. Hey, Nick.
Hey, how's it going?
We're just thriving. The government is open now. I believe CFTC and SEC staff that were previously furloughed are back to work. Talk to me from your perspective, what you're watching for, what happens now that the government has finally opened again.
Yeah, around 10 p.m. last night, President Donald Trump signed the continuing resolution. So at least into January 30th, the government is funded. We're going to have this fight all over again in January, so we'll keep an eye on that. But in the meantime, we're seeing Congress get back to work on crypto market structure legislation. The federal agencies, as you mentioned, the SEC and CFTC, are able to get back to doing things like approving, public listings, evaluating ETF applications. We saw a number of ETFs, kind of pause right as the government shut down, and some of the issuers tried going with, procedural workarounds to try and launch their products. But now the SEC can actually provide feedback to these, would-be issuers and get that process going. The CFTC obviously has been doing a lot to try and, engage in certain types of rulemaking. We can get back to that. CFTC acting chair Carolyn Pham even confirmed that she's trying to enable spot market trading by certain entities. So that's back on track. And then even the other agencies, the Treasury Department had previously put out a proposal of public rulemaking for the Genius Act for stablecoin regulation. They can get back to looking at the feedback on that, figuring out what makes sense, what doesn't make sense, if they have to revise anything, things like that. And we're just seeing that up and down the board. So the OCC, federal bank regulator, all these companies are applying for federal bank charters. Um, all of that is back, at least for now. We'll see what happens in January, but at least for now, all of that is able to resume.
So, Nick, it really looks like we're finally starting to see some progress in market structure. We had the Senate Agriculture Committee finally release a discussion draft. Obviously, there's still work that has to be done. There's a markup. There's going to need to be a marrying of that draft with the Senate banking draft. But what I'm hearing is that this bill is on track for passage in the spring. What are you hearing on your end? What are your thoughts on market structure right now?
Yeah, that sounds right. Timeline wise, this year is. I know the goal was to have this done this year. That is, I think, no longer even a remote possibility. But as you mentioned, the Senate Ag Committee published their draft. There are a lot of details that they acknowledge need to be worked on. We saw those bracketed sections that cover everything from rulemaking decisions to definitions to parts of the there's a section called minority view, things that Democrats want before they will agree to pass this thing in full. But it's progress. This is the first time we've seen the Senate Agriculture Committee publish a draft. The Senate Banking Committee has published multiple drafts, but obviously we know that there are certain things that Democrats on that committee want as well before they will continue, working towards that. We may have a markup this year, is my understanding, at least on the Ag Committee. That seems to be a strong possibility, but full passage, as you mentioned, will take some time. But the other thing that we're also seeing is that the Ag Committee does seem to be working on this. They scheduled a confirmation hearing for Mike Selig to be the permanent chair of the CFTC next week. So, that was a nomination that we've been expecting for over a month now, and that may happen sooner rather than later. So it's still progress.
Okay, we're going to discuss many of these topics with our next guest, Nick, but I think what's important here is to just kind of level set where we are now that the government is open and we're talking about moving forward. There are several different drafts of market structure out there. Can you just talk us through what each one signifies and what it's going to take to get these all together into one piece of legislation that can be signed by the president? And my second question for you is I want to take a step back and level set on Genius. Genius was signed, but there is still some work to do on it to actually get rules created based on that legislation that was signed into action. So just lay a foundation for us all here. Give us a reset. What's going on with all these drafts, and where do we go from here with Genius?
Okay, I'm going to do Genius first. So, as I mentioned, Treasury Department had already put out some rulemaking. I think we're going to continue seeing, that rulemaking process develop. Through the shutdown, the general public was able to provide feedback to some of the proposals. We saw companies like Coinbase, exchanges, lobby groups, etc., provide feedback, including banking organizations. So the banks are also trying to get their own views on this. The Treasury Department, now that it's reopened, the staff there can actually take a look at this feedback and say, okay, here's a complication we hadn't thought of, or here are some things that we need to clarify because it's clear people don't understand what we're talking about here. All of that is, back on track. That's the stuff that, we'll be watching for to see how exactly the Treasury Department and the various, agencies within that department respond to the public feedback. If they provide another draft rulemaking proposal, or if they say, well, we're good, we're going to just finalize this draft right now. But we're going to see that rulemaking process continue. On the market structure legislation. So the thing about Genius is that it was easy because I say easy, relatively easy, because it affects a narrow segment of the crypto market overall. Market structure has this complicating factor of the U.S. having securities and commodities overseen by two different agencies and having definitions for securities and not securities that are kind of, I think, specific and unique to how the U.S. operates. A lot of countries don't have that distinction. or legislation the same way that we do. So it's easier for other countries like the European Union and its MiCA regulation to come at this. For the U.S., because it's two different agencies and because the CFTC is overseen by the Agriculture Committees in the House and Senate, and the SEC is seen by the Banking and Financial Services Committee in the Senate and House, means that these committees have to work together or have to jointly pass something before legislation can become law, which we're seeing now because the House, we had the Clarity Act that was passed on the same day by both committees and then passed by the House overall. It was a very relatively smooth process. Here we have the Banking Committee with all its multiple drafts, and we are waiting for a revised draft to come out. We expect that. I don't know when exactly that's going to happen, but that's something that we know that it will happen eventually because Democrats and Republicans seem to want their specific tweaks, things that we've seen in the agriculture draft, for example, around making sure there's a number of commissioners for minority party and majority party, dealing with conflict of interest. That's something that has been raised as a concern. So the Senate Agriculture Committee will have to hold a markup hearing on its bill and then pass that. The Banking Committee will have to hold a markup hearing on that bill, pass that. The two bills have to be merged before they go to the Senate floor. And then the Senate overall will have to pass this thing. And then it'll go back to the House, and the House will have to either say, okay, we're going to take what the Senate gave us again, as they did with Genius, or they'll say, okay, we want to make changes. We want to do, X, Y, Z. And then if they do that, then things get a little more complicated, but we'll worry about that bridge when we get there.
That sounds like a long, long process to me, but we're going to unpack that now with our next guest. Please welcome Chainlink Head of Public Policy, Adam Meinhardt.
Hey, everybody. Thanks for having me on.
Hey, Adam. Well, Nick just kind of laid out what needs to happen to get this legislation across the line. And like I said, it sounds like a long time with a lot of different drafts that need to be made. I know you took a look at the Senate Ag draft. You had a really good thread on X about it. Talk to us about what stood out there from your perspective. What do we really need to be paying attention to from this draft?
Yeah, I think, up front, what I would say is the ag draft and the banking draft are two totally different, separate jurisdictional approaches to this issue. The ag draft is going to look at regulating digital assets through the CFTC. The banking committee is regulating this through the SEC. The thing that really stood out to me, and I think it's kind of uncomfortable to hear, is that this is what a framework for a bipartisan draft looks like. There were things in it that were clearly in there at the behest of Democrats. There was a nod towards ensuring that Democrats would be appointed to the CFTC. There was a nod in there to addressing ethics issues in regard to the issuance of digital assets. A nod to the Trump family's interest in crypto activities. But what we saw here was really a draft that had both Democratic priorities and Republican priorities in one. We haven't really seen that. Clarity was largely a Republican-driven approach in the House. The Senate Banking Committee draft was really Republican-led. So that's really what stood out to me, is that this was, for better or for worse, a draft that included both Republican and Democratic ideas.
Yeah, very important insight, Adam. Obviously, getting to 60 votes, so important in the Senate. You need some Democrats to do it, and there's very limited time and there's a lot of interest in getting this done before midterms. What I'm curious about is your take on the differences between the House's approach and the Senate's approach. I mean, one piece of this that I thought was interesting in terms of a difference between the two bills is that the Senate approach has a self-certification process with the SEC, whereas the House requires the SEC to take action, which of course is a lot slower, a little bit, I would say, less pro-innovation, pro-business. I'm curious what your take was on, from your perspective, what the important differences were between the House and Senate approaches.
Yeah, definitely. I mean, that was one point that stood out. Again, what was nice about the House draft is you could really see how the SEC and the CFTC, at least in theory, would work together in terms of moving something from a security over to a commodity, really in the Senate, you're really looking at two distinct drafts, and you're kind of trying to patch them together in your mind about how one thing would transfer over into commodity land. The concept of ancillary assets is out there, but I do think, to your point, that is really what stood out to most of us in industry, is really the ability to self-certify in the Senate bill, and more of a robust SEC-driven approach in the House draft. I think, given where things stand now in a post-Biden, post-Gensler era, I think a lot of us were comfortable with clarity, but now as we get closer to 2028, I do think there is some concerns about, well, how does this work in a post-Trump administration world if there are Democrats at the helm at the SEC making some of these decisions? So I think that idea of discretion is a really important distinction that has stuck out to a lot of us. But again, I would emphasize again our points I made previously, really on the ethics issues and the CFTC noms issues, which really is almost more of a political layer to this discussion than really a policy layer.
So one other question that I'll throw out there is how you see the role of the SEC and CFTC once market structure passes. I mean, I think one thing that's fascinating to me is, as you mentioned, in Clarity Act, in the House version, there's a lot of discussion about these commissions working together. Not as much in the Senate bill, but the Senate bill really seems to continue to give a lot of bandwidth and space for the CFTC to play a much bigger role, even though I think there's been talk recently about harmonization and increasing the role of the SEC.
And Adam, I just want to add to Renato's question there. There was a time when I would say the SEC and the CFTC almost seemed like they were fighting for jurisdiction over this industry. Are we heading into a new era where that fighting just looks differently, because both are really positioning themselves as the regulator still for the industry, maybe in different ways?
Well, I think from the perspective of most in industry, I think most people believe and want to end up in CFTC digital commodity land. So in some way, with the talk of no action letters at the SEC, various innovation exemptions, I think we're looking at the SEC largely working themselves out of a job. I think the challenge here becomes that the CFTC is a much smaller agency. Their enforcement activities largely go to fraud and manipulation. The number of staff that are capable of providing the sorts of activities you would need for spot market regulation, which is contemplated in all of these bills, is likely not there. And this largely becomes a question for appropriations and funding for the CFTC. So big answer is, I think we're not seeing infighting, we're seeing cooperation, and the cooperation leads itself mainly to commodity land and the CFTC. I think what we have to wrestle with is, do we start to think about ways to bulk up the CFTC, their capabilities, their resources they have to take on these new responsibilities? But I definitely do not see any infighting. And I think with Mike Seelig being nominated, coming from the SEC, it's this really strong signal that we're going to see more of a partnership between these agencies moving forward.
So I want to stir up a little bit of drama / ask a question. As the Genius Act got its way, worked its way through Congress, we saw the House, leadership say on numerous occasions that they were going to do their own bill. They were going to, try and get the Senate to work with them. And then they didn't. They took the Senate bill, they voted on that. That became the law. The House has, various members of the House have now said over the last couple of months that they wish the Senate would take Clarity Act, look at the Clarity Act as a framework, et cetera. Does it seem like, the same thing that happened with Genius is going to happen here, that the House is just going to have to take whatever, market structure bill goes through the Senate? Or do you think they'll actually try and push back and get some of their own priorities in there this time?
It's a great point you raise, and not one that people like to talk about in the city, because I think it's seen as like hey, we just want good legislation. We want good policy. Who cares whose name's on the bill? But I think the reality on the Hill is you do take pride in ownership. And it is a big on the Hill issue of who's getting credit, who's putting the final edits in. I don't want to say there were sour grapes, but there were sour grapes last time. I think the 60 vote threshold is going to continue to give the Senate really the lead here on what becomes law. So I do think the House is going to be in the awkward position of having to take what the Senate produces. We saw strong nudges from the White House with Genius Act last time, even though French Hill and GT Thompson wanted to make further edits to the bill. There were promises that were supposed to be carried forward to the next draft legislation. TBD if we're going to see that happen. But there's definitely some points of disagreement between the chambers, which aren't really intra-party chambers. They're just different approaches to the legislation. So, Nick, I think you're spot on here, but I think the Senate's going to continue to be in the driver's seat. And I do feel bad for the House. I worked in the House for 17 years. Everyone is spending so much time focusing on the Senate, and the House people are like, hey, we have a bill that passed out with a strong bipartisan vote. It combines the agriculture and banking positions into one text. It is sitting in the Senate, people. Why don't we use this? So I feel the frustration there, but the 60 vote threshold is really what's sitting behind all of this. So I'll pause there, but really good question, Nick.
Adam, you and I spoke about this last week, but I think it's important to bring it up again here. What happens if for some reason market structure doesn't get across the line? Where does that leave us?
I really think it leaves us in a really bad spot. I think there's the strong potential that we see Democrats win in the House in the midterms, but potentially win the White House in 2028. I don't think we'll ever go back to an era like we saw under Gary Gensler. I don't think the political appetite is there for that, even if Democrats do win. But we'd certainly see a slowdown in regulation. I think we'd see an increase in enforcement. So I really do think we are in the window of achieving some form of market structure framework that could really help propel the industry forward with, the term clarity is overused, but with the clarity it needs to basically innovate in the US, bring foreign companies onshore, and really provide consumers clear protection. So I do think if we don't get it done now, it's a missed opportunity. And I think, unfortunately, it's one we'll probably regret. Oftentimes, legislation is passed largely based on temporal environmental conditions. I think those conditions are present right now to get this done. We just got to find a way to get 10 Democrats.
One issue, Adam, you raised earlier was the need for increased funding for the CFTC. The CFTC is a very small commission and has generally stretched itself to appropriately regulate a lot of the traditional registrants that are under its purview, the CME Group and ICE futures and so forth, right? And now they're being asked to not only regulate crypto potentially, or much of crypto, but also prediction markets, which we discussed earlier. So, but yet when I don't think I've spoken to anyone who is advocating of substantial increase in appropriations for the CFTC, for whether it's lobbyists, people in the industry, even senators and members of Congress. So do you think that will actually happen as a realistic matter in the next couple years?
I agree with you. You haven't seen that concerted effort to really increase the CFTC's budget. And you're right. With prediction markets, you can self-certify, and 24 hours later, you're up and offering a product, ideally with some degree of surveillance. So I think the new burdens they're taking on are significant. And I do think the appropriations fight is a much different fight. It's a much different beast than going through these authorizing committees. I don't have a lot of optimism for it. Having been through the process, I would likely see the agency get the authority first and get the money second. I think that's the unfortunate reality of how DC works. So not suboptimal for sure. I think there'll be a lot of frustration and have to be some oversight hearings. Unfortunately, likely some sort of failures is my guess until you really see the amount of funding necessary. But yeah, really, really good question. I think a brighter light needs to be shined on the funding issues at the agency to bring it really up to par with the SEC. I mean, your point on prediction markets is spot on, and the self-certification nature of it is just, I can't even imagine what it's like to be in the CFTC right now with all of these products trading at the flip of a switch.
What do you think the timeline would look like from getting the authority to getting the resources?
If we are to see, say, market structure finally get through in March or April of next year, this spring, there will be an appropriations bill running in parallel. I think the best we would hope is some sort of deal by the fall that pluses up the CFTC's budget. I think it would likely move after market structure is done, that people would get serious about the CFTC funding. So I'd say 6 months to a year lag would be my guess. And that said, there will be a lot of rule writing at the agencies. So there may be some time available to stand up the sort of staffing that they need to really implement it. But wow, there's going to be a lot of rule writing too. So that's a whole nother question. And Renato, you probably know the burdens of that better than anyone.
Yeah, I mean, I think Dodd-Frank rulemaking took almost a decade, if I recall correctly. So, we've talked about clarity. We may have some clarity. Certainty is not going to come for quite some time.
Well, there's also the point of, depending when market structure passes, the notice and comment periods could go into the next administration, depending how far this goes out. I mean, let alone a CRA window. So lots of unknowns, really. When people say the window is now, I feel like the window really is now to get this stuff done, or it could get really, really sticky.
Adam, distill that for our audience. I mean, what does that practically mean if that happens?
Yeah, I mean, if you pass a bill today, usually a notice and comment rulemaking period will be 12 to 18 months, but standing up the comment period itself may take 6 to 9 months. So you add 18 months plus 9 months, you get 27 months. We're approaching 2.5 years. The Trump administration has 3 more years to go. So right there, you start to get really close. If that goes into the spring, you're likely going to have comment periods that may well be open when a new president takes over. They could suspend the rulemaking in process. We saw that with this administration, with prior administrations' rulemakings. And then there's something called the Congressional Review Act, which, depending on the time period of when a rule was made final, the Congress has the ability to overturn it. So that also could come into play for several rules under this. I like to think that there's enough of a bipartisan basis now in Congress to potentially prevent that from happening. But the pendulum swings on these things pretty dramatically, and it's really hard to guess where things are going to go here.
And just for context, like what you're talking about with the Congressional Review Act, that's exactly how Congress overturned SAB 121 at the SEC, which was pretty unpopular.
Yep, exactly.
So, Adam, one thing I'm curious about, another subject that Jen and I've talked a lot about, is the role of states. And we're there. Some states have been very pro crypto, right? We have some states issuing stable coins, but we also have states that are taking aggressive action in certain cases, and there's been plenty of enforcement actions that have been brought by state AGs and so on. Given that we have a pathway to getting something passed, preemption is going to start being discussed. I mean, what do we think there's going to be any role for the states after this, or a limited role? What do we think that's going to look like?
I think that's going to be a line in the sand for a lot of Democrats on this when they come to understand what sort of preemption we're talking about here. I mean, I'm right now sitting in, very close in suburban Maryland, where I cannot receive yield on state assets still. So I do think when it becomes clear what preemption we're talking about, I think you're going to see states weigh in. We've seen the enforcement actions in Oregon. We're going to see them in other states. I think it's a great point to raise. We haven't heard a lot about Dems raise preemption, field preemptions, but I do think that will become a political issue. Now, on the other side of the coin here, we've seen Texas, New Hampshire, and Arizona pass strategic Bitcoin reserves. We've seen Wyoming with their own stable token. We've seen now North Dakota express interest in doing their own stable token issuance. So we are seeing such a wide range here of state activities. Coinbase this week announced they're moving to Texas. So it really runs the gamut here in being open to crypto or completely closed to crypto. But I think you're right. That's likely to be another flank in this fight. It hasn't been one yet. We've focused largely on Trump ethics, stablecoin yield, DeFi, but not really the preemption side of it. So hopefully this show doesn't create that, but it may.
We like to think we have an impact here.
What?
I want to talk about some of those sticking points. DeFi and anti-money laundering left out of that Senate Ag draft. We saw it yesterday. Like you mentioned, conflict of interest remains a sticking point. Do you think that these three things I've just mentioned are going to hold up the process in any way? I know the last time, Adam, you and I spoke, you said maybe DeFi is left completely out of the bill, and a lot of folks in the DeFi industry hopes it goes that way, but curious to hear your perspective.
Yeah, I mean, I think the issue with that, I'll take maybe the easiest one first. I think the ethics issue with regard to Trump's family will be a bright line for some Democrats, not all of them, but I think a few of them. So that probably limits your total number of Dems in the Senate you can get on it. In terms of DeFi, there's a line in the sand there on developer protections. 160 plus organizations signed on to a letter led by the DeFi Education Fund. So I think developer protections is going to be, that must be in there. In terms of exemptions, I think you're going to have some degree of exemptions for DeFi as well. So I think that also becomes another line. On AML KYC, there already are pretty robust BSA requirements on off and on ramps within the crypto space. Most comply for them. I think that is probably a point of leverage that more can be done to draw in already compliant institutions that are using crypto assets. So not effectively putting new obligations on DeFi, but putting additional obligations on already regulated institutions entering this space. So I think that's something where there might be some wiggle room on here. It's a tall order, though. It's a very tall order here to appease Democrats to get 7 to 10 of them on this bill. And I mean, you're also, again, you're facing a split jurisdiction there in the banking and agriculture. The bills are going to have to be brought together at some point too. So hard lift here. I'll just leave it at that.
Jen talked about DeFi a minute ago. We had a bit of a blow up over DeFi recently. It was such a blow up. It was almost like drama that was created on social media. And I will say what I'm hearing from Senate Democrats is that really hit them hard. They were very upset. They felt betrayed. They had developed relationships with the industry. They felt like they got backstabbed by people that they had formed relationships with and were working with in good faith. Help me understand, what was the reasoning there? How did that come about? How did that that public dispute develop?
Yeah, it's a lot to unpack. What I will say is that the 12 Democrats who are working, in good faith to try to come to a common ground really include members across the political spectrum. Those that are much more comfortable with the technology, have a deeper understanding, to those that are much more skeptical. So that group of Democrats really isn't monolithic. And it is kind of trying to decide, like, if we were all try to decide like what pizza we want to order, the chances we order the same thing is probably not likely. There's going to have to be some trade-offs. So what we saw from that DeFi offer was really a group effort to try to appease those that are most skeptical of DeFi, to those that are more comfortable with it. It's really unfortunate it did get out in the way it did. Capitol Hill and DC just in general is a very leaky place. As you probably all know, we've all probably received things with, please don't share this with anyone. And that, that like you're one of 15 people who got the same thing. So it's unfortunate it was leaked in the way it was, because the reaction, I think, from a lot of folks downtown was one of just completely like disbelief that what they were talking about in this kind of behind the scenes offer was something the industry thought that they had educated folks on to not arrive at these conclusions. And this is really, I think, where if you talk to people who really understand DeFi, I think a lot of them believe it's really an education issue, that people on the Hill actually don't understand what DeFi is with regard to custody of a consumer's asset. So I think this is something that I think we keep coming back to. Is this a website where you're just using it as a portal, or is this something where a technology platform is actually holding a customer's asset and doing something with it? So I think that basic education, I think, is what industry is like. I think that's what you saw. You saw people's like heads exploding and being like, really, this is where we're still at this point. And so I think that's what you saw. It was leaked in a really unfortunate way. A lot of frustration from industry on kind of like, you still don't understand what we are. That really set us back weeks. We had the big meetings with all the CEOs, and I was fortunate to go to both of them, and our CEO came down. But so that took like a whole sideshow of let's repair and rebuild, and now we're back to that. So very DC. I mean, you guys have lived this just as much as I have.
The way all four of us laughed when you said the notion of getting that email that says, please don't share this with anyone. We're probably all on the same list.
Yeah. I mean, the number of times we probably get that in like a week is like, but so yes, it's very DC. So.
All right, we are going to leave it there. Adam, thank you so much for joining the show, joining Renato, Nick, and I today. It was a pleasure having you on, and you're welcome back anytime.
Definitely love it. Love you guys and what you're doing. Thanks for having me on.
Thank you.
That was Chainlink's head of public policy, Adam Meinhardt. All right, that is a wrap for us. Nick, thank you for sticking around for today's show. As always, it is a pleasure. You are our famed regulatory mind here at CoinDesk. So just like I said to Adam, you're welcome back anytime if you don't get too busy. Sometimes you're just too busy for us.
Thanks for having me.
All right. I'm Jen Sadassi. That's Renato Mariotti. We are here every other week live on CoinDesk's socials, discussing everything to do with crypto, regulation, and policy. Join us if you missed the show or you're just tuning in. The VOD will be there for you to watch at your own pleasure.